So let's chat about the markets and which way forward from here with Taher Badshah, CIO Equities in Invesco Mutual Fund. He joins us on the show right now. Taher, hi, good morning. And we've been picking up the data point that equity mutual funds in the month of August have seen an inflow of 20,000 crore rupees. Tell me, with such a large chunk coming to you guys, how is it that you're deploying money? Because the market is definitely running out of fresh ideas. How much cash are you sitting on currently in your own portfolio?
No, so our cash levels are not very high, somewhere in the vicinity of between 3 and 5% at best in most of the portfolios. Broadly, I believe that we are looking at a relatively more diverse universe. We know that there is a lot of action which is going on in some pockets of the market and where valuations are to some extent reasonably elevated. But there is a fair section of the market which is also ignored and which provides some value opportunities or opportunities where probably with the revival of growth in some of these companies, there could be reasonable possibilities of re-rating. So we think we are in a position to reasonably balance portfolios with some of the ongoing stories of growth and some of the emerging growth stories. Besides, there is a decent amount of supply of paper, as you know, which is coming from various various forms, and to some extent, this supply is good enough to soak some of the incremental flows which are coming into the market. And I think it's not just the case with us; it is obviously the case with the whole industry. So I would reckon that it's still not a situation where we have to simply blindly chase stocks no matter what and irrespective of their valuations. I think we still can be reasonably choosy and see whatever excites us from the point of view of a good balance between growth and valuations.
Okay, that's the view on the market right now. But Taher, we've been just wondering about what are the newer pockets that one could look at. I mean, we've been looking at the moves across the Bajaj group. So, now you're seeing a nice smart catch-up play out in the underperformers. So Bajaj Holdings, which began its move only in July, that's holding out. Bajaj Auto, which has been an underperformer of late, that's been seeing a big move. Are you spotting any of these kind of trends which you think there is a scope for a catch-up in the market?
Yes, kind of, certainly not in the names that you mentioned, not necessarily only in the names that you mentioned, but many others as well. And that's exactly what I'm referring to, that there are plays which are available, which have been ignored, probably have underperformed, but incrementally conditions are likely to get better. There are opportunities in companies which are probably oriented towards the rural sector and not just agri-related, agri-stroke, non-agri-related opportunities as far as the rural sector goes. We think we are reasonably positive on that theme, that we will see relatively better prospects for the rural markets premised on several factors, especially after the last year's debacle post demonetization. So I think there are opportunities arising in that area which are of companies which are reasonably priced as well. We don't need to necessarily run after expensive valuations in some of these cases. So clearly the opportunity set, the basket is widening. In some of the cases you may have you may have to be a little more patient. Your returns may not necessarily come about immediately in the next 3-6 months. But I think if you take a 12-18 month out call, these can turn out to be fairly good money spinners.
Taher, now ultimately if markets have to form, map earnings are not there. And let's be real, earnings will not come in this quarter because of GST and other factors at play, and earnings may not come in this year at all. So how much long do you think markets will be in this denial mode and we can keep on riding this liquidity gravy train?
So, clearly I agree with you that near-term earnings outlook is still fairly muted, although there can be reasonable hope for an acceleration towards the fourth quarter of the year, whereby we would have probably hopefully got over some of the hiccups that we are currently facing. But I think broadly the market is now kind of fixed their eyes, train their eyes on FY19 and what kind of possibilities that can hold up, especially if some of these current hiccups are well behind us, and we see certain benefits come out of some of the reforms undertaken by the government, and we start juicing out things out of the tax base, benefits out of financial inclusion, etc. So FY19 is where we have to train our eyes, and markets will have to take a view of that. I think what can disappoint significantly is that we have a situation where we have a reasonably good macro mix. It's come after a long time. I can't remember in the last 15-20 years that we've had a situation where so many good things are present in the economy, in the sense our current account is under control, fiscal is reasonably in shape, currency is in control, commodity prices are fair, interest rates are still within our still favorable. Inflation may rise from here, but still reasonably favorable. So I think you will have to see factors which significantly destroy this macro mix to lead to a situation where that hope element of the market that earnings recovery will never come about, or is further postponed out into time, were to happen. If that were to happen, then I agree with you, then we probably in for a fairly significant correction of the market. But probabilistically, it doesn't look like we are going to see a significant destruction of this macro mix, and therefore the market will bank on the hope that the earnings recovery is around the corner.
Okay, I'm just going to mark the Bajaj group of companies once again. So that is where I think the real action is. And when I say Bajaj group of companies, Bajaj Finance, Bajaj Finserv, Bajaj Holding, Maharashtra Scooters. Maharashtra Scooter is sitting on investments of other Bajaj group of companies, and that explains why why Maharashtra Scooter in a sense has got massively re-rated, because of the intrinsic value of that company or that investment has certainly gone up. Taher, how does one figure out whether NBFCs are a good investment or not? Right now, as long as there is a prefix or a suffix NBFC, that stock is in demand. Nobody cares whether it's a gold NBFC or a retail NBFC or even a wholesale NBFCs. Not all NBFCs are great, but it's a rising tide which is taking everything up.
Yeah, I mean, if investors are going to cut it that way, then it's a fairly sad way of doing things, approaching it. I think in fact the recent shocks to the economy have actually kind of engulfed some of these NBFCs quite a lot. So what one can probably do is, and that is what we are probably trying to do, is look at those NBFCs which have been able to weather the storm of the last few 6 months or so, and have yeah, so the ones which have been able to weather the storm reasonably well in the last 6 odd months, those are clearly the ones which will be in a position to come out better as the environment improves. I think we can look at companies which have got reasonable scale as another factor, another cut for shortlisting NBFCs. We can look at those which are relatively better in terms of their liability profile. Even though interest rates are likely to remain reasonably soft, but and which is going to be favorable to all NBFCs, but you can shortlist them on the basis of how strong is their liability profile as well. So there are 3-4 different ways in which you can, and of course there is we know that these are high growth companies, so there is going to be a certain amount of premium. We don't want to significantly overpay, but we know that we may not be able to get away with very low valuations either. So we can look for reasonable valuations, in some of these NBFCs, and yet be in a position to play these stories. So there are various ways to still sift out the grain from the chaff as far as the NBFC space goes.
Okay, so tell me, what are the new ideas that you're currently working with Invesco at Invesco, or currently keeping on your radar for whenever you see a dip, you would want to buy more of those stocks?
So obviously, like I can't spell out the names, as you know, but we are, I can't really think of a sector preference that we are developing at this stage. It's kind of diffused across whatever we see as an opportunity set. We are kind of agnostic to where we try and generate our ideas from. It has to essentially satisfy some basic parameters on the same few key elements, which is essentially to do with quality of the business and management, and where we see growth. or the potential for growth if the growth is currently not there. That is how I can't really think of sectors where we are significantly overweight, underweight. As themes, as I mentioned, rural is a theme, consumer discretionary is a theme.
Okay.
Right, Taher, go ahead.
Sorry, I'm hearing some disturbances in the background. So, nonetheless, consumer discretionary. This is again a theme where it appears that a lot has happened and a lot of stocks have gone up and a lot of performance has already come in. But even consumer discretionary has had fairly decent cycles, and we think that there are mean reversion possibilities even there. Many of the trends in consumer discretionary are actually lower than the last 4-5 years average in terms of the demand in some of these sectors. There are mean reversion possibilities even in that sector. We see some mean reversion even in some parts of the financial space. You've got to dig a little deeper. At the same time, we are also kind of well supported by some of the new IPO ideas which do come in front of us. We are not chasing anything and everything, but we are in a position to kind of filter out some good quality businesses which we think are durable. So that is how we are kind of that is what we are busy with, if you ask me, in the last few months.
Okay, Taher, such a pleasure having you today on the show. Great speaking with you as always.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.